The outspoken CEO Elon Musk have made it all for Tesla. Tesla has been remarkable, and it has been a showstopper in the world of stocks. It is undoubtedly one of the best stocks, and investors could not agree more. However, there is more to Tesla than you could see. Behind the amazing things you know about Tesla, in this video, we will tell you the truth about Tesla stock. If you're new to this channel and you want to enjoy quirky new contents, don't forget to click that subscribe button and make sure to smash that like button. But if you're a subscriber, well, welcome back to Informed Few. Now, let's dive into the video. The company has a lot of irons in the fire. Tesla provides vehicle service centers, supercharger stations, and cars with ever-improving self-driving capabilities. Its energy generation and storage segment include the design, manufacture, installation, sale, and lease of stationary energy storage products and solar energy systems, along with the sale of electricity generated by its solar energy systems to customers. All that being said, in the first half of 2020, automotive sales accounted for 85% of the company's revenue, which means cars are Tesla's bread and butter. Tesla first went public in 2010, offering 13.3 million shares at $17 per share. Recently, the stock trades are at more than $1,430 per share, meaning if you had purchased Tesla at its initial public offering price, your return on investment today would be more than 8,300%. While that is an extremely impressive return of investment, the road has not always been easy for investors. Tesla's story is one of great volatility, bogged down by a history of missed manufacturing deadlines, controversial market-moving comments by CEO Elon Musk, and a steady stream of traders ready, willing, and able to short TSLA stock. Tesla is the world's largest automaker in terms of value, roughly the size of Toyota Motor Group, TM, Honda Motor Co., HMC, and General Motors Co., GM, combined. When it comes to growth prospects, Tesla has all of its older competitors beat. While all those companies have taken their cue from Tesla and begun to manufacture their own electric and eco-friendly automobiles, Tesla continues to be the dominant name in the market. During Tesla's second quarter earnings call, the company announced that Austin, Texas would be the location of its next gigafactory in the US. The billion-dollar factory will be used to assemble the Cybertruck and Tesla Semi, as well as the Model 3 and the Model Y for sales in the eastern half of North America. Although disruptions on the production line at its Shanghai factory due to the pandemic seemed like they would derail Tesla's lofty goals, the company emerged surprisingly unscathed in the first quarter and reported strong numbers in the second quarter. The company beat expectations with deliveries of 90,891 cars in the second quarter. Deliveries in the first half of 2020 increased about 13% over the last year. Revenue of $6.04 billion outpaced expectations of $5.2 billion. It earned $104 million in net income, or 50 cents per share, compared with a loss of $408 million, $2.31 per share, in the second quarter of last year. Perhaps most important to note, which Wall Street anticipated hotly, was that this represented Tesla's fourth consecutive quarter of profitability, a milestone that could have serious implications for the stock going forward. Retail investors love Tesla. The company is among the 10 most popular holdings on commission-free trading app Robinhood. According to the platform's website, more than 530,000 users own the stock, placing TSLA just behind other big tech names Apple, AAPL, and Microsoft, MSFT. Also, 4 months after Musk teased the idea of Tesla insurance, it became a reality for drivers in California. In a company blog, the firm described Tesla's insurance as, quote, a competitively priced insurance offering designed to provide Tesla owners with up to 20% lower rates, and in some cases as much as 30%. The solution has first been launched in California, with the expectation that it will expand into additional U.S. states in the future, the firm stated. Quote, because Tesla knows its vehicles best, Tesla Insurance is able to leverage the advanced technology, safety, and serviceability of our cars to provide insurance at a lower cost. This pricing reflects the benefits of Tesla's active safety and advanced driver assistance features that come standard on all new Tesla vehicles. However, there are cons of buying Tesla stock. Here is the real truth about Tesla stock. It has been called the most controversial stock on Wall Street. In spite of its recent successes, many analysts remain trepidatious about Tesla moving forward. The consensus on Wall Street is that the stock remains overvalued at its current price. Whatever the case, the CEO shared his candid thoughts with more than 36 million followers and caused the stock price to tank. In early July, Musk tweeted a suggestive taunt at the SEC, an agency that brought a securities fraud challenge against him in 2018, for tweeting that he could take the company private at $420, a huge premium to the share price at the time, and promising that funding for this transaction was secured. He paid a $20 million penalty to settle the charge and was forced to step down as Tesla's chairman. He poked fun at Tesla bears days later by tweeting a link to, quote, limited edition short shorts made with red satin and gold lace. The shorts sold out within minutes, temporarily crashing the company's website. Looking at the stock's historical performance, in July, the last 12 months account for the, quote, vast majority of gains. The lesson here for investors is that there were long periods of doubt and uncertainty. It's worth noting that Musk first began making comments about TSLA being overvalued in 2013. Analysts also say it's hard to get a good handle on exactly where Tesla stands, performance-wise. Even when Tesla manufacturing lines hit the company's long-awaited production goal of building 5,000 Tesla Model 3 vehicles in a single week in 2018, shares of TSLA fell because investors and analysts didn't believe Tesla could easily sustain those numbers. That's understandable, considering Tesla employees went through, quote, production hell to get Model 3 sedans delivered to customers, with the company going so far as to set up a large tent in its Fremont, California parking lot to expand its production capacity. As for the vehicles themselves, Tesla noted that the average selling price for its cars dropped further in the first quarter of 2020 as demand shifted in favor of its more affordable Model 3 and Model Y vehicles. This isn't a problem as long as Tesla can get its production facilities up to speed on time and continue to crank out enough Model 3 and Model Y vehicles to keep profitability high. And a history of delivery delays casts some doubt on if the company can get it done. As virus cases surge across the US, further impacts of the pandemic could drag production. Tesla has been forced to cut pay and furlough employees this year, while production at its Fremont facility was temporarily strangled. Though these issues had some impact on the company's earnings in 2020, both the second quarter earnings report and conference call spoke indirectly about the pandemic and the, quote, challenging circumstances of the current environment. Although Tesla has the capacity to exceed 500,000 deliveries, as promised by Musk, the company has acknowledged present difficulties and the possibility that it may not be able to meet that number due to production interruptions or inefficiencies. As of the second quarter, the company is still targeting that quota for 2020. The potential for another recession is also a major cause for concern. Shares would likely tank, as we witnessed in March, along with the broad market. It's been a roller coaster of a stock, but in late 2019, the ride got a lot more comfortable for investors. Musk began the company's second quarter conference call by saying, quote, I've never been more optimistic or excited about the future of Tesla. As the company celebrates a new milestone in profitability and shares hit new highs, the ride over the near term will likely continue uphill. The company has opened a manufacturing facility in China, and another will open in Germany by 2021, taking some of the burdens off its Fremont facility, as well as the new Gigafactory in Texas. The electric vehicle maker has made production more streamlined, leading to an improved bottom line, while revenue continues to grow, and there are no signs of a slowdown anytime soon. As its cheaper Model 3 and Model Y vehicles gain traction, and its Cybertrucks and semis await somewhere down the road. If TSLA can keep it up, meet its delivery goals, and perhaps rein in its CEO, The company will continue to enjoy success in the second half of 2020. If history is any guide, betting against Elon Musk tends to be a bad call, but the risk remains, and investors who are interested in buying TSLA shares should be adding them to a well-diversified portfolio. Tesla is already the largest car company in the world in terms of market cap. If things continue to go Tesla's way, that's not likely to change anytime soon. What can you say about the truth of Tesla stock? Let us know in the comments section below. And hey, if you enjoyed the video, might as well hit like and subscribe to our channel so we continue giving you engaging contents. Thanks for watching. See you in the next video.